Australia's in the middle of a rental crisis and there's no relief in sight for tenants. In fact, things are only going to get worse because of a number of initiatives taken by various state governments. Dr. Andrew Wilson and I discussed that in this commentary on his latest rental market report. But if you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so we can update you each time a new show comes out. Australia's in the middle of a rental crisis and there's no relief in sight for tenants. The news is full of stories of spiralling rents forcing families into secondary accommodation or even towards social housing, with waiting lists even worse than private rentals. So I'm keen to hear details of the latest My Housing Market Rental Report from their chief economist, Dr. Andrew Wilson. Hi, Andrew.
Yeah, good day, Mike. We're trying to fix this problem on the demand side, but of course it's the supply side that's the problem. Sometimes feels like we're just sort of shuffling the deck chairs on the Titanic here. The government was all about housing affordability and forgot all about rental affordability. Or the new government, well, the old government too, has paid short shrift to what's now, as you rightly suggested, is a rental crisis.
So what are your latest statistics showing?
Well, perhaps a little bit of a surprise. I'm not sure if it's relief, but the data shows us that over July that asking rents for houses were basically flat. Now, I don't think that's because there's been a rebalancing of supply and demand. I don't even think it's really seasonal factors as well. I just think that we're heading towards a position where rents have increased extraordinarily over the last 12 months. And guess what? Tenants just can't afford to pay any more. We've still got record low vacancy rates for houses. Rents aren't rising as they have been month after month, because I think we've just hit that, for in the short term anyway, an affordability barrier where they just can't keep rising. But they will rise because tenants, or will be, as part of the inflation environment that we have, will be asking for higher wages because they want to be able to pay higher rents, or they have to pay higher rents, which again will just fuel inflation, which again will just fuel higher interest rates, Michael. But yes, the news on house rents was encouraging in the sense that there were no rises. In fact, there was only, all capitals recorded flat results except for Perth, which eased slightly. But the rents, as I said, are so high that tenants are finding it difficult to keep pushing, or have their capacity to keep paying more. But unit rents continue their upward movement, Michael, and I think that there's perhaps some sobering news in that tenants are being priced out of houses and are now looking at the more affordable option, which are units. And it's really only the Melbourne market that remains, I guess, a beacon in terms of offering more choices for tenants for units for rent. But that's come down very, very sharply over the last 12 months. So I think that's only going to be a short-term, perhaps, balance between supply and demand in the Melbourne unit market, particularly if we get the expected flood of migrants coming back into Australia and international students. And typically Melbourne is a key destination for that demand source. So that'll again push those vacancy rates down and match those of other capitals in units.
Well, when you look at vacancy rates in our big three capital cities, they've in general fallen by almost half. In other words, during COVID, people moved out of units. They didn't like sharing lifts and corridors and accommodation with people. But now they've got no choice. First of all, there's no houses to rent. Secondly, houses are more expensive. And I guess people are now getting to live in, let's call it, a more COVID normal world. So apartments are filling up.
They are, Michael. And I think if we look at a bigger picture scenario here, I think what we saw also in terms of those high levels of supply in Melbourne and Sydney for apartments, and that was really the only two cities which did have higher levels of supply, and that was basically inner city Sydney and CBD Melbourne. It was a perfect storm of higher supply and reduced demand when we had COVID, and that of course was the shutting of borders, so we didn't have international students particularly absorbing rentals in Melbourne CBD and Sydney inner city. And also we had more of the Airbnbs moving into that market as well, shifting from holiday to permanent. But the big picture was, Michael, that we had an apartment boom in 15 and 17. And what we saw was the back end of that boom filtering into on-the-ground unit. So it was just the end of the high levels of supply that we had through the apartment boom. And of course, that's gone now. We've hardly been building any apartments since then. And there's significant long-term lags from apartment approvals, of course, until they actually supply the market on the ground. So the outlook is that on all fronts, as the perfect storm was for higher numbers of vacancies in those unit markets, it will be for lower numbers going forward. And it's being added to by the high level of demand and high rents for houses, which mean that a lot of tenants can't afford to rent a house now. So they will be looking at those cheaper options. Even those with families will be looking at units as not just an option, but, really their only destination in terms of what they can afford.
So the rental crisis really is affected by supply and demand. But that started quite a few years ago, Andrew, didn't it? When APRA tightened the screws on investors, investors left the market, and now we're paying the price.
Yeah, and they also tightened it on developers. We also saw some very short and narrow focused policies introduced by state governments. Should we be surprised at that? No, we shouldn't. Which increased the levies and stamp duties on international investors, making it hard, which was nonsensical. All it did was reduce the supply. For what reasons? International developers can't live in these actual units. They're providing accommodation for those with residency. And I think there'd be a lot of tenants out there would just be certainly wishing that hadn't have occurred, so they'd have more choices out there. But this, of course, is the price you pay for misinformed policy decisions. The long-term consequences can really be difficult to overturn, and we're going to find that now, and this will cause significant grief in terms of family and household budgets for those that are tenants. And of course, the other scenario here, clearly, Michael, is higher rents will fuel the need for higher wages in a full employment economy, which we're already seeing. And that, again, will fuel the capacity for spending that will work its way into consolidating or keeping inflation moving at these 30-year highs that we've got at the moment. And of course, housing costs are a significant part of inflation basket of goods. So it's, as I said, this is now becoming a perfect storm in reverse. And policymakers really have to put up their hand and saying, well, we have to bear some of the responsibility for this. And I notice even the Reserve Bank, who was continuously talking down the tightness in the rental market, even when we were discussing it and revealing it, are now saying that part of this is a fragmenting of the size of families. I mean, really? These are our policymakers, Michael, and these are the rationale for their decision-making. And just have a look and think about how high your rents are now and how high your interest rates are, and think about, well, is this, again, a sign of the incompetence of some of our policymakers, certainly the short-sightedness of some of our policymakers.
Now, there's always going to be tenants, and it's not necessarily people who can't afford to buy. Right. It depends upon their lifestyle. Yes. Some are rent investors. They rent where they want to live but can't afford to pay for and invest elsewhere. And others, it's just the stage of their life. And the governments have left the supply side of this to private investors. But the various state governments are making their state rental laws more onerous for these people who are providing accommodation. Andrew, last year the Victorian government introduced 130 amendments to the Residential Tenancies Act, and in general these are in favour of the tenants. More recently, Queensland announced it's going to make significant changes to tenants' rights. These are going to be introduced next year. And of course, Queensland's government's now going to increase land tax for property investors based on their interstate holdings. So from June next year, an owner's liability for land tax won't just be determined on what they own in Queensland, but also on properties they own interstate. But there's implications of this for investors, but also for renters. And Andrew, I just read a result of a survey that suggested more than 60% of investors in Western Australia are going to sell up their properties if the proposed changes to the state's rental laws are adopted. All this is just going to make the rental crisis worse.
Absolutely, Michael. And it's just has you shaking your head again when we see the attitude by the mandarins in state governments. We've also seen it at federal government level, as we just discussed, knowing that this will only make the situation worse. And what's the end game here? Rent controls, actual controlling rent. They tried that in New York, and that's been a culture for a long time. And New York's an even bigger disaster as Melbourne and Sydney and Brisbane and Perth and Adelaide, and you can name them all. And their rent controls are pushing investors to other areas, creating even more problems in terms of a lack of supply. And this is all these policies will do, create less supply, push rents up even higher, because you can't control the essence of demand and supply. And then we have the discussions about, we'll provide social housing. We need hundreds of thousands of houses, and that's beyond the capacity of state governments to provide. In fact, we probably need nationally 1 million houses to rebalance our housing markets, and it's just not going to happen. And all these fiddles, Michael, will just end up in higher rents and higher levels of poverty and higher levels of inflation. We've just got to build more houses, and that means more incentives for developers and investors not less. Read my lips, Michael. It's just Groundhog Day again.
Well, it's been forgotten that most investment properties are not owned by rich moguls. We know that mum and dad investors who only own one or two properties account for more than 90% of all rental providers. So removing their rights regarding their properties, not giving them the right to be able to determine finish leases or choose whether they can, the tenants can paint the properties or amend the properties or have tenants, that's going to have unintended consequences. As you say, all it's going to do is put pressure on governments, and if that's the case, us as taxpayers to provide more accommodation.
And even if we took pathway of saying, okay, well, governments are now going to build houses, they just don't have the capacity to be able to do that at the levels that are clearly required. And of course, Michael, today we have the building approvals data out. Guess what? It fell again. So we're building fewer homes, planning to build fewer homes. And if the other point to that, those building approvals, when we release the latest building cost index, my housing market will be releasing that in coming days, it'll show, I'm sure, another leap in the cost of building a house, which means there's more granular disincentives to build a house anyway with high building costs beyond, the policy positions that seem to sound good as a panacea for the political environment in the short term. But the long term is finding ourselves in an even worse position that than when we started hitting developers and investors nonsensically on the head at the federal level back in 2016 and 17.
Well, isn't it interesting how whatever the government or our regulators seem to do, there are unintended consequences they haven't thought it through. But I believe property investors who have a long-term perspective are going to see through this. You and I have been around. Remember, they removed capital gains tax. They put it back. They introduced GST, and they said that the world was going to come to an end, and it didn't. We've had high interest rates, low interest rates, recessions, and good times. But those who've owned investment-grade properties and A-grade homes over the long term have seen the value of their assets increase, and that, in my mind, is going to continue.
Yeah, absolutely, Michael. But as I said, we just need to build more houses, lots of houses, and we need to do it quickly rather than think about fiddling on the demand side, which will only make things worse. You wait and see.
Okay, well, it'll be interesting to see how all these things pan out. Catch up with you next week for our regular Property Insiders chat.
Yes, thanks, Michael.